Hey guys, welcome back to an update of the red folder news in the last 2 days. I thought yesterday was pretty disappointing. There was no big candle. We can go through that now and then. I want to show you guys what happened today and how it all played out. So what I want to do is quickly, let's just go to yesterday. It was 9:45. Now mind all my lines. I've got reasons for all of these lines. 9:45 was this one here. This little candle here. I mean, if you mark that high out and that low went down, there was nothing you could have traded there. So yesterday there was basically no trade, so we wouldn't have worried about all of that. But looking at today's chart, let's break this down. So you'll see this big blue block is an opening gap, and what I normally do here is just to show you guys. I'll break it down to regular trading hours. There's a gap that forms, and it's a very high percentage that price always retraces down into the 50%. But going into this day, and not to worry about that opening gap, I've looked at the higher time frames, and I know there's that volume imbalance, these purple lines, and if you go higher up here, there's some, a bigger fair value gap up here, and a high up here, which is, very equal to the highs on the daily time frame. So you can check out the daily time frame. So I'm not going to go through that, and you can go through my market review video, and that talks about all of those levels. But when I came to the charts today, I was waiting red folder news. It's this big black candle over here, which is 10 o'clock, and we're going to break this thing down now. So what I've was looking for is this liquidity up here and these equal highs that I've marked out here. But that's where I think we're going to go in the PM session later today. And these two purple lines, if we close above that, we might go higher. But today we've got the red folder news, which is a big black candle going down. And our target for this, just to mark it out quickly, is the top. There's no wick, but it's still the top. That's a liquidity that we would have targeted. And then the bottom of this, but the bottom of this was taken out pretty immediate, and breaking through these ups and downs. I did not take any entry there because I wasn't convinced at this point in time where price was that it's not clean. It's not a clean setup for me. It's two separate candles here. It's a spike into the middle, then a candle, so it didn't give me any reason to say, all right, I'm going to start buy from here. So I just left it, and I patiently waited to see whether we're going to take out these lows and form a new fair value gap. This big black candle was an aggressive push down to take these lows and left us this fair value gap. Then price pushed in, but never closed outside of it, and took out another low, and then aggressively pushed and a close above this fair value gap. That retest of the IFEG, that was my entry. I'm going to show you my entries now, and this fair value gap that formed here at 9:30. It's an ICT concept taught by Michael. That's that very first fair value gap. That's very significant to trade. I mean, there was a great short right there. I didn't take it because that's not the strategy we're talking about. But from this point here, this is your target up here. But I've taken some. You'll see now. Let me switch on my. And I literally traded just before I started making this. So as you can see, I bought two sets of 5 micros on the test of this IFEG. And then right at the middle, it lines up with a previous day's gap, and I closed half my position up here. And the reason I closed it up there is so many times I've seen this big fair value gap forms with this 10 o'clock candle where price go in it and then retrace deeply all the way down here. And I didn't want to give any profits away, so I thought, let me take 50% off here and then just break my stop, bring it to break even. If it goes down, at least I took half the profit off. And then I actually took an early close of another 3 up here. I don't know why I actually put it there. I closed it off, I only looked at it afterwards. This was supposed to be in line with the top of the red folded candle. But be as it may, that gives you 70% of my position was off the table. And then I was just waiting for price to, break a nice structure with momentum and create a fair value gap like here. And it was pushing in, and we obviously inverted this bigger fair value gaps. And now my bias is bullish, and it gave me a reason here to bring my stop to break even, right? Well, more than break even in profit up to here. And I just left it because I had 2 more contracts left, and I was targeting this fair value gap up here. And sure enough, it went up, it pulled back, and then eventually it closed me out up here. So I made a good, I think it was $1,500. And as you can see now, just in line with what it is, guys. This is the live market, and this is live. This is a funded account that I'm actually trading. So this $1,500 is obviously money that's in my funded account. All right, so let's have a look. So this liquidity up here is a target. These equal highs is a target. So I'm expecting this to come through, or at least get here. This lines up with the 50% of this line and this line, and this is a volume imbalance on a daily chart. So if it breaks above this and close above this 50%, then we're definitely going to target these highs up here and this big fair value gap. But I'm not going to talk about that now. I think I just want to give you guys a quick video as to why we didn't trade yesterday. There was nothing significant there. And then today, and it just shows you a lot of people yesterday, if you look at the market was very sideways. If you tried to trade that market, you would have lost money. And if you've made money, well, good for you. But I don't think there was a solid strategy for you to make money yesterday, because market was just going sideways. Then we walk away and we come back the next day. The next day gave us a nice big candle. The market starts dropping. And what's good about this big drop, a lot of people feel like they're missing out. Us as traders with a solid strategy like this one I'm teaching you guys here, there's no need for you to try to rush into a trade. As you can see, we made a high here and we broke down. And the highs is lower highs, and lower lows. So this is all liquidity building up. Then we get this big push down and another push down, another push down. Eventually, it gives us a solid reason to take a buy. Now you've got this liquidity. You've got this liquidity up here to take it in here. If you just want to take a scalp trade, that's good enough. You would have made some money. That probably would have given you about $600. And then you got this liquidity that I'm teaching, that we're targeting. That gives you a nice target. And then you get all these lower highs. That's presenting even more liquidity. And as you can see, as we speak now, we just spiked into those equal highs and liquidity that I've marked out from earlier. So even if you left a runner on to go all the way here, I just didn't want to risk this, because it's a funded account. I want to take money off the table. If trade runs higher, then good. I've got the analysis right. I've seen it so many times where we mark these things out. We got through all these targets. If you don't take profit, it turns around and it retraces, and you've given up all that profit. So all in a nutshell, guys, we've marked the highs and the lows. The lows was taken. Eventually it gave us the entry. We ran all the way up. Regardless of how you manage your trade, you got to, I mean, again, it got to the other side of that red for the candle. And it will happen time after time after time. So, and there was lots and lots of reasons up here for you to hold trades even beyond that. So that's all I've got for you guys today, and ladies. If you want to know more about the strategy, I mean, tomorrow there's no red folder news, but Thursday and Friday we will have. So hopefully we get another opportunity as this to take a trade. I will do a recording again to take you through the trade with my real executions in a live market. And if I've got enough people to join me on this journey on a live session, I'll stream it live. I'll take you guys through it live. And yeah, if you've got any questions, feel free to pop them in the comments below. And it's, your support for subscribing to my channel is greatly appreciated. And I would love to see you guys like and, subscribe even more to this. And so I can make more videos like this. And obviously this setup is going into the one for the journal. So I'll send this, I'll publish this out, and it will be in our journal playlist. And whenever you want to see how it all plays out, you can go through those. And don't forget, if you're not too sure how this all works, ask me in the comments or go through my training short video that I've made. Is exactly how it works. And I'll link it in the description below. All right, ladies and gentlemen, have a good night, and I'll speak to you probably on Thursday or so. Have a great week, and be safe, and don't overtrade. Take care. Bye-bye.